Hey, it's Chris Hobart with your Hobart Wealth Weekly. Now, as we roll into 2026, I know a lot of people are traveling, you're spending time with family, you got these big bucket list trips coming up this year. But at the same time, we're seeing plenty of headlines, interest rates, where the markets go from here, the thing in Venezuela. So, what we want to do is we always like to take a look at different research papers out there and find out what their outlooks are and talk about how their outlooks kind of give us some guidance for the year going forward. And I want to unpack one from a company called First Trust and really talk about unpacking what their research means and what it does or does not mean for your retirement plan. So, truth be told, last year, the same team thought the economy would slow and the stock market would struggle quite a bit. Now, instead, the S&P 500 finished the year up more than 16%. Now, they said in their own words that their negativity, it was unwarranted. So, why are we going to start here? Why are we going to talk about this specific group? Well, I think this is a good reminder. Even smart people with lots of data, they don't get it right every time. Markets can surprise on the upside and the downside. So we don't build your plan on perfect predictions. Instead, we build it on a range of outcomes and we take a look at a range of different viewpoints. So, what are they talking about for 2026? First, the economy. It's still growing, but at a slower pace. When you adjust for inflation, they see real economic growth somewhere around 2% and inflation up around 2% as well. Now, that's about 4% overall, which is slower than the last few years, but still forward progress. Now, second thing, there's some real positives going on right now. We've got recent laws that restored 100% expensing for a lot of business investments. There's been some deregulations as well as fewer bureaucratic hurdles. And we're still in the early innings of AI and the technology boom. So, all of that can support productivity and growth over time. Now, at the same time, there are some challenges. Uh, for example, Europe, right? Like Germany and UK, they're already slowing down. Um, Energy policy has pushed electricity prices higher there, which means that their manufacturing's been hurt. Now, if we talk about closer to home, the U.S. economy, it's pretty split right now. The higher income households, they've benefited from rising asset values, stocks and houses and things like that. But the lower income households have been hit harder by inflation and debt. You've got things like buy now, pay later that has been increasing and stretched out car loans. These are all a sign of stress for some consumers. Now, on top of that, the stock market, it's starting this year from pretty high valuations. Since the low during COVID in 2020, the S&P 500's total return, it's up almost 190%. And now, at the same time, corporate profits and the overall economy haven't grown nearly that fast. By their math, broad indexes, they really look expensive compared to history, even if profits keep growing and interest rates ease up a bit. Now, this is the bottom line that they came to. Good things, they're happening, but risks still abound. And we should be wary about the broad market and expect 2026 could feel more like a roller coaster at Carowinds than a straight up line. So the question is, what do we do with a forecast like that? That's a lot of good information. It's got some good, it's got some bad, but really, how does that apply and impact us? Well, for you, the question isn't will the S&P finish higher or lower 12 months from now? That's a guessing game, and there's plenty of people that will talk both sides of that. Instead, the question that you should be asking is, can my retirement plan handle a year or maybe a couple of years of choppy markets and slower growth while I still get to live the life that I want? So here's three practical checks that we focus on at Hobart Wealth. Number one, a risk check. If the market does have a bumpy year, do you know how much your portfolio could reasonably move up or down? Then, are you comfortable with it? This is especially important if you're drawing income for travel or family expenses or just big projects. Now, second thing, diversification beyond the headline index. The thing is, the outlook makes a great point. We invest in a market of stocks, not just a single stock market index. That means there can still be opportunities, even if the big averages look pricey. We just have to find them. So being selective and being diversified matters more when valuations are a bit stretched. Now, third thing to consider, income and flexibility. In a still wary environment, we want your income plan to work whether markets are up or down or sideways for a bit. Now, that might mean blending different income sources, maybe holding some stability in the mix and keeping enough flexibility so you're not forced to set or sell rather at a bad time. And if you're active and you're traveling or you're helping your kids and grandkids and you're pursuing new goals in this stage of life, the goal is kind of simple. Let your plan absorb the volatility so you don't have to. Big picture, one of the research teams we follow, they're cautious in 2026. They're not panicked. They're just realistic that markets have run a lot. And the ride, it could be and maybe should be a bit bumpier from here. Now, that's exactly when having a real retirement plan, not just a collection of investments, becomes really important. And now, we're going to go much deeper on all of this at our Hobart Wealth State of the Market Summit 2026 event. So put on your calendar February 24th, 2026, because that is when that's going to be. We're going to be walking through the outlook, what it could mean for retirees here in the Charlotte area and beyond, and how to keep your plan aligned with the life that you want. Now, if you're wondering whether your current plan is ready for the still wary 2026, as some economists predicted, that's always what we're here for. All right, folks, thanks for watching. Again, Chris Hobart here. Have a great 2026 and beyond.